Well, good evening, everybody. Welcome to the session for today. I hope you're well. I hope your Wednesday has been a good one. Welcome, as always, to this special session that we always have on a Wednesday, or usually have on a Wednesday evening, called Our Inner Circle. For those of you new, you're very, very welcome. What we usually do is have a quick look around markets and then a deeper dive on a particular topic. Of course, this week we're looking a little bit more in a little bit more detail at rare earths, what they are and where they come from, and why there's a drama about rare earths at the moment, and maybe more so going forward. But of course, it's your session, so please feel free to ask questions, say hello, make comments, all that sort of stuff. As we do, if there's anything you want me to particularly have a look at chart-wise, then let me know. But anyway, let's get into the session today. You should see the let me know if you can hear and see me okay as well. That's always wonderful. So whether you're watching this on GoToWebinar or on YouTube, you're very, very welcome. Let's just pop up this important message just to remind you that this is for educational purposes only. Please make sure that you do your own due diligence. Make sure that you follow trading plans on every trading action. G'day, Sonia. And make sure that you manage risk in both entry and exit consistently with your own personal trading objectives in the financial situation. Let's just check out all the questions. Thank you to everybody who said hello. G'day, David. Hi, Wayne. Thank you very much. G'day, Keith, Johnny. I hear you, Wayne. I hear you, Wayne. Hey, Shane. Good to see you here, mate. As always, buddy. Thanks, Keith. I am well. We've had a planned power outage today, which has been a complete nuisance, which has just lifted about 20 minutes ago, which completely threw me into a bit of a wobble. Thanks, Brian. Hey, Dave. Good to see you here, buddy. Right. Okay. Let's get into it. So, really, there are four key things I want to talk about in terms of cross news wise. Of course, just to put it all into context, of course, we are, good evening to you. We are at great highs. Let's just pop in and have a look at what there's the US 500 for you. So that's bimbling around record highs. If we look at the popping out there on, it's always good to have context, and then we can sort of look a little deeper in terms of what. There's the Nasdaq. And of course, the Dow had a good day at the office as well last night. There you go, record highs on the Dow last night. So if we just take a sneaky peek, this is what happened overnight. You can see there the Dow was the outperformer, a bit flat on the Nasdaq. And if we look at the futures, you can see pretty flat on the US futures. European markets having a little bit of a wobble to start the session. Big buying into oil. I'll talk about that later. In fact, I'll mention that now. It looks as though the US and India may be having a little bit of a deal going on. US have obviously been twitchy because India have been buying cheap Russian oil. That made the US very unhappy. But apparently there's a deal on the table that means there'll be less buying of Russian oil. So that's possibly one of the reasons why we've seen this move to the upside. If we look at the European markets right now, you can see there the FTSE is doing pretty well, whereas the DAX and the to the downside. If we look at what happened in Asia, you can see there really a flat day in Asia. The Indian market is not open today. No, Indian market must be closed today. So anyway, that's where it's all at. If we look at what the data is doing, it's obviously the data is a little tricky. One of the key things that's playing on market minds is the global shutdown. Sorry, is the US government shutdown, which is now done 3 weeks. It's going to start to get to the place where US markets are concerned. We may see some uncertainty creeping in. Still no obvious resolution. We've had some big data coming out of why has it done that? Big data coming out of the UK today. You can see that softer inflation number than was expected, although it is the same as last month. So I'm not sure what implications that has on the Bank of England, but that softer inflation number has sent the GB pound to the downside. We'll have a look at that in a moment. Crude oil inventories are out tonight. That could be important. Now, there is supposed to be CPI data out this week. It was, of course, supposed to be earlier. When last I heard, it was going to be released on Friday. I might run a special session on Friday if you want me to. We've got PMI data out on Friday as well, which is pretty key. Now, again, that's subject to will they or won't they. We are expecting a tick up in CPI year on year, and if that does tick over 3%, it's not going to make Trump very happy, and it possibly might impinge on the Fed's willingness to, at this stage, they're likely to cut rates twice before the end of the year and once in January. If that CPI number does start to move significantly over 3%, then we might see a change in that. But for now, everything's cool. And the reason it's cool is because of earnings. So US earnings season started last week. The banks are obviously kicking things off. Things have ramped up this week. Around about 18% of the S&P 500 have reported so far. So far, the numbers are spectacularly good. Around about 80% are beating EPS expectations. Just under that are beating revenue expectations. But obviously, we've got a lot to come. The tariff talk I've already referenced. Obviously, there's still debates going on between the US and China. There was one of the catalysts for this war was the imposition of major tariffs on the China. China suggested that they were going to restrict exports to the US of rare earths. Trump didn't like it. So that's one of the reasons why we saw markets drop off a couple of weeks ago. We've seen a recovery since, as we've seen with everything that's going on. And then outside of that, of course, there's been lots of action in commodities, primarily driven by the USD, which has had a positive week this week. You can see there. We were looking a little soft at the back end of last week, but this week has seen buying coming back into it. And of course, because of that buying, we've seen this drop off in oil. Record highs again 2 days ago. Big sell-off yesterday on USD strength after getting somewhere near that 400. I want to put it into context, though. It's really quite spectacular, the move up. But this could be a turn. Okay, we haven't seen this sort of drop for a while. So it did go up 30%. We're now down to 22%. So we've dropped a reasonably significant 6% since the last couple of days. So that's really quite important. If we look at today, though, this could be a point of interest around about this 40-50 level. You can see on the way up, it was a pause point, and you can see that rejection candle. If we look at today, that rejection candle through it, it was only a 15-minute chart. It was only about a half-hour interval. But we look as though we could go down and retest that. That's sort of interesting. Is the gold bull run over? I wouldn't bet on it. Copper is trading mid-range. Now, oil touched earlier in the week, touched 4-year lows. And if we just put this on put it on a monthly chart, you can see the last time it was at this level was back in March 2021. Having a little bit of a positive update. So we've got a 3-wick reversal there. You can see that looks quite positive on the daily chart. If we look at the hourly chart, just a little bit of a pause. Not surprising that we're getting a pause around this level. Sorry, that was a little bit of enthusiastic. Around about this level. Still well under $60, and that EIA data tonight might upset things a little. So that's our wrap of the major. The major asset classes is Bitcoin. Bitcoin looks it's threatening this 107 level, which is really quite important. You can see this has been supported. If we do reach 107, it'd be the lowest since June. We did have an intraday test of that. Crypto's not been very kind to investors simply because there's quite a lot of market manipulation in crypto. Some of the other cryptos got absolutely destroyed. Um, so just be careful, particularly moving into Friday and into the weekend. In the FX scene, very quickly, really, we're going to have a look at a couple of things. Here's the US yen, which is stuck in a sideways range. Here's the Canadian yen. We looked at this yesterday. You can see this is the new range tool, range identification tool. Those of you Trader IQ, if I hadn't had a power outage, I would have given you this today. But the idea of this is if we can ascertain what a range is, then we've got the three potential range moves. We've got a breakout plus a simple breakout. We've got, which you see on this here and this here. We've got a break retest, which you can see here. And then obviously we've got our fake out, which let's see what we can find. Let's just put another one on here. As we go around, as we go, you can just see that we put a GB pound on this. Let's put the GB pound Aussie on this. And you can see the GB pound, since that data came out, has been under pressure. It looks as though it's found support here. Good example here of fake out. So we got this range, brief move, and then move back into the range here. So that's a fake out there. Another one here. We got the break here, back into the range here. So those are our three range band strategies. So breakout, simple breakout, break retest. So breakout and retest and fake out. So if you've got this tool, it should put you in good stead. And if you're part of GIQ, you'll get it. It looks as though we might have found a bottom on the GB pound Aussie. You can see there, if we look at some other crosses, GB pound yen again struggling to hold this support here. But we could again see a bounce on the GB pound USD again. Come on, when you come. This is looking the most bearish. I like this as a chart of the day. I think this is, if we just look at a 4-hour chart temporarily, you can see there's potentially a key level at this point here, which you've actually breached. If we look back on the 4-hour chart, this point, and this point, even look at the daily chart. So you can see the importance of this level, possible move down to test the low from here. So if we look at where we are now versus that point, I think now we've breached that, there could be a potential move down. If we get some momentum behind it of around about 70 to 80 pips, there may be a pause point here at around about 133.15, 133.14, somewhere around there. So that would be because of this this potential pause at this level, that would potentially be the short entry. But of course, it could bounce back up and close this off. So that it's at a really key level. It's in a sort of liquidity zone, if you like. You can see lots of times it's traded around here. So breach either way here, a potential upside move to around about 133.65. Potential breach to the downside, possibly 132.60 is the target. So there you go. That's my chart of the day, the GB pound USD. Be interesting to see how that unwinds over the course of the next few days. I'm going to look at LYC later. Let's just quickly check in on a couple of stocks. Vulcan Energy in the lithium space, really nice bounce off of support. Just make sure we're on the data. I quite like this for a move back up to retest this level at around about 720. Of course, at 680 today. Other ones are watching outside of the rare earth space, which we can talk about in a moment. Just watch Wally. I like Wally if it breaks 1430. But we just had that pullback today, which has just set things a little. And Jumbo Interactive, probably my favorite stock of the week in the ASX. We got corporate news, which created this gap, and since then it's just moved to the upside. I still think there's potential upside in this, possibly up towards this sort of 13, sorry, to this $14 level. This reflects this range. So this candle today was really quite positive. So providing it doesn't explode up there in one hit tomorrow, this is one worth keeping an eye on. Tomorrow, potentially 7% to the upside is the possible target. If you look in the US, AMD caught my eye. It's bimbling around a resistance level. We're in extended hours trading pre-market at this stage. Could be an opportunity to the upside. So there you go. There's a little meander around markets. If there's any charts you want me to have a look at, let me know, and I will do. Right. Okay. Let's get into the topic for today. So let's just give a little bit of an overview of rare earths. Rare earths are sometimes called rare earth elements, or abbreviated to REE. They're essentially a set of 17 heavy metals, and I've listed them there just for reference. They're not really rare per se. Okay, so they are kicking around and about all over the planet. Lots of rare earths in the Earth's core, but they're not usually. So why they're termed rare elements, REEs, is because first of all they are not in big deposits, so they're quite difficult to extract. They're usually sort of mixed in among some other stuff. Also difficult to process because of that, and because of few different reasons. The control is in a few hands. The notable hand is China, which so there's two sort of elements to this. There's the actual mining side, and then there's processing. So currently China controls about 90%, 85 to 90% of global processing. A lot of them are used in various sorts of magnets, which are usually pretty strong. But their sort of application, these are the five main key areas. I kept on finding others, but sort of smartphones, computers, hard drives, lots of green energy. It's interesting. It takes so much energy to drag it out of the ground, and then you can push it back into energy. Used in electric vehicles, electric vehicle motors, which of course one of the reasons that China's interested in keeping hold of it is to dominate that space. Also used in guidance systems, radar, jet engines. I also found just before I started actually that it's also used for those stealth coatings that they put on the outside of jets to make them difficult to pick up. It's also used in those coatings. It's found in lights, flat screen TVs, rechargeable batteries, and also facility converters to reduce emissions, etc., and all refineries to try and again reduce emissions. So lots of uses, but because of the difficulty in getting hold of it, and this slide sort of aims to illustrate that. Where's my little mouse gone? So you'll see you can't just look at the reserves. I would imagine there is in the health sector. You would imagine MRI scanners, certainly. Some of the radiological investigations, some of the healthcare machinery, particularly. I'm not aware of anything outside of that from a medicinal point of view. But if we look here, you can see there by the chart that it doesn't matter if you look at the difference between production and reserves, it's obviously going to be massively different. But what's interesting is like countries like Vietnam and Brazil have a major reserves, but have major difficulty in getting it out. Whereas Australia has far less, but Australia are really quite efficient in getting it out, and it's a little more accessible. Um, Despite the US's fairly big comparative mine production, I couldn't get anything more recent that give me this much detail. But the problem is that the US only has 1.5% of the total reserves on the planet, and so therefore is reliant on the Chinese to the degree of. If we look at what, and these are sort of 2025 figures, sorry, 2024 figures, that despite the US's reasonable mine production, then on mine and production, then there's still 70% reliance on China imports, and that is why that control of 90% of 90% of processing and the need of so many countries to have rare earths if they want to develop from a technological point of view. That's why there's China have got a big hand to play in terms of the rare earth sector, and why it was a big deal, why it is a big deal if they choose to restrict exports. For reasons for China want to restrict exports, first of all, they need lots themselves if they want to lead in some of the tech areas, but also, of course, it's a big card. It's a big negotiating tool for them, and one of the reasons why Trump decided that Trump got really upset, applied the 100% tariffs again. So primarily, if we look at the global refinery, I've found this, which was sort of interesting. You can see here that although the rare earths is here, and you can see the degree to which China controls the rare earth world. Just here's some others, but you can see that's a generally speaking, that China has the lion's share of mineral production and enables them to. So it's not necessarily the reserves; it's the ability to produce it as well. And the reason why China is able to do that is production is sometimes the regulations are stricter in other countries that could produce it, not so much in China. In terms of Australia, Australia is not badly placed, to be fair. There's all sorts of little deposits kicking around, things like the Ukraine, and that was obviously one of the reasons why Trump was interested in the Ukraine, in helping the Ukrainians in the Russia-Ukraine conflict. But of course, has been in the headlines this week after Albanese and Trump had a little powwow. So essentially what they've done is they've formalized a critical minerals framework. Now, it's really important at this stage to recognize that this is a framework and there'll be a co-financing arrangement which will go to looking for and developing new supplies, with the overall goal of from the US point of view is decreasing US reliance on China to some degree. And it'll not just be the mining, but also the potentially the production. The actual rollout is unclear, not only in terms of when and where, but how much. And of course, this is with China tightening export controls on REE. It's sort of up the ante. It's raised the urgency of it's raised the urgency from the US point of view to try and find other sources. As I said, a decrease in the reliance on importing from China. If they can, obviously, if they can reduce that 70% to 40 or 50%, then it obviously means that the Chinese don't have quite as strong a hand in terms of the negotiations. I haven't heard much, but I'm sort of interested to know going forward, once things are clearer and there's a plan and possibly some action occurring. It'd be interesting to see if that puts additional strain on Australian-Chinese relations. Um, as I said, I haven't heard anything solid relating to that that's got any legs, apart from a couple of potential opinions that suggested that that might upset the Chinese a little bit if there was lots of beyond the framework to potential action. But the jury's out because the plans aren't that clear. There's a potential couple of places, a couple of sites in Western Australia again. Some whispers around that that might be the case. WA is just full of stuff to be ready to be dug out the ground. But as I said before, this isn't. It's not like there's a massive deposit in one place and you can easily extract it like maybe you can other materials. It's usually sort of wrapped up in you're picking them out of big chunks of other minerals. So being one of the major sort of barriers to it being easy to extract and process to in any volume. So having given the background to it and why they're important and what they're used for, then of course what really we're interested in is what are the opportunities that might exist. So essentially you've got two main sectors, if you like. So you've got the mine to produce an oxide of an REE, and then downstream a little bit with related sort of things like refiners, magnet makers, recyclers, because there is the potential for recycling also. But there ain't many companies around who really excel at this or have this as their mainstay. There is also so you essentially your options are individual stocks or diversified ETFs. Now, one that I found in the US. IMX. Oops. So if we look at this, that's probably the biggest ETF. With an ETF, what you've got to do is let's look at the Yahoo one. There are a couple of key things if you're ever investing in ETF. First of all, there may not be a CFD available, but there might be, and it depends on what access you've got. I might have a chart actually to the guys, and I'm just going to check. It's not before I make the assumption that it's not. It is. So you can try out an MT5. As a CFD. There we go. So obviously has been doing well, but just that pullback over the last sort of week or so. Volatility is about $4 a day. So fairly volatile because that's around about 4%, isn't it? Actually, 4 or 5% a day is the standard sort of movement. So if you did want access to this, you've probably got to be quite careful at this stage. It looks like a technical double top, which is sort of interesting. But the key thing with any ETF is that you check what they're holding. So I'll give you an example. I remember a number of years ago now when I did lots of options trading. I liked the I used to look at ETFs, and one of the ways to invest in, if you like, soft commodities is an ETF called DBA. And so I just assumed it would have wheat and corn and all those sort of stuff that were actually difficult to trade on an individual basis at that stage. So I merrily sort of invested in some of this and saw wheat go up and corn go up and got very excited when I looked at what was happening in the futures. And then I discovered that they didn't hold wheat or corn futures. They held sugar and cocoa and all that sort of stuff. But at that stage, their holding wasn't that um, uh, wasn't what I thought it was. So always check your holding. What I'm going to do is I'm just going to paste this into. Doesn't do very well on DBA, by the way, at the time. I'm going to paste that in there. You can have a look for yourself. But you can see that it actually has holdings of essentially material stocks. So there's no futures there that it looks like. And big US company, of course, Linus, which we're going to talk about in a moment. Oh, PLS, that's interesting. So it looks as though if you were to do a deeper dive on this, you'd have to do a deeper dive on this, but of course some of this is lithium, and although lithium doesn't come in the rare earth thing, and uranium doesn't, as another example, Liontown Resources has another Australian lithium company. Obviously, the if you like, the remit of this particular ETF is minerals as well. So it doesn't just have rare earths; it has strategic minerals as well. So have a look at that. Have a look at the details there. And as I said, you can trade that as an ETF. Be aware that the holdings will dictate performance, and that's critical when looking at ETFs. Oops. So essentially, the major market drivers on this are going to be things like policy support, China expert moves, what the investment is in renewable energy. And of course, the US, because Trump likes his oil baby oil or drill baby drill thing, and has received massive support from oil companies in various election campaigns. Trump is very global warming is a myth, and we don't need to invest in renewable energy, and I don't like windmills sort of vibe. So obviously, decreases from a policy point of view, although obviously outside of the US, there's quite a drive towards renewable energies. But any sort of policy changes in that, as well as the export situation, as well as, of course, some of the things that rare earths may be used for, because in many cases it's non-negotiable in terms of developing technologies. So if you look at the drags, then there's any sort of projects. So this US-Australia project isn't clear, although that might, in theory, increase supply to the US, decrease that dependence on China. At this stage, it's probably a significant time off. There may be cost blowouts in terms of extraction and processing. There may be there will be environmental approvals to go through, not just from the mining point of view, but also some of the processing. So some of the processing that's required, and of course what the underlying metrics are in terms of usage and demands. If the expectation on some of the things that rare earths are used for drop, then obviously so will price. And stocks, etc. So it's actually really quite difficult to find a pure play in terms of rare earths. But if we look at ASX stocks now, I've listed the whole, but really the two top ones are where you would have a look at. I thought ASM were actually on, but Lynas is the largest non-China producer. US links already exist with Lynas. Iluka is also increased its rare earth mining over the last, mining, and is moving into refining with government funding over the last few years. So those are the. I thought Australian Strategic Minerals were on T5. Let me have a look. No, not anymore. They're not. But of course, you may have access to others. But the two main ones that are obviously a part of the. We've been banging on about Lynas for an eternity, it seems, over the last few months. Bit of a soft day today. Again, looks very, very similar to that ETF chart that we showed you before. So you can see that pullback, but it's had this has been chart of the day so many times since early part of the year. If we look at sort of this sort of beginning of May, then it got to 200%, dropped to 150% to the upside, but this is a natural retracement, if you like. But that's a significant drop of around about 15% from its high. The question is this the bottom on this or not? Or are we going to find a bottom somewhere around this area here? That is the question. I just want to see. There's a site which is usually really good. You know, I'm just seeing if they've got any rare earth data. This trading economics is great. So we may have found that some of that as rare. Right, the other place I'm going to try again is, let's just see. Oh, also going to give, right, there we go. Know this. So these are a list of stocks that may have some exposure. So what I'm going to do is I'm going to stick this link in as well. There we go. I might even pop it into YouTube if you just hold on. See, there's a few people in here. There we go. I popped it to YouTube. Thank you for you guys watching on YouTube. Okay, so there you go. There's a couple of resources to have a look at. Back to charts. So in terms of Linus, we want the bottom on this, and then the next move is important. Obviously, now we've got an identified top, which we didn't have for ages. We did actually sideways trend for about 3 weeks. Of course, Is it rumor versus news? No, I mean, obviously, it was news that Trump and Albanese met this week, and so and rare earth, as I said before, there is no hiding or no denying that talks that rare earths were high on the agenda for that, and whether Australia can help the US. Um, or whether it's just a negotiating tool by Trump to say, hey, well, look, if you don't deal with us, China, if you don't, because this is what's happened, isn't it? With lots of the trade stuff that's going on at the moment, China played it with soybeans. So US said, we're not. So rather than get involved in the tariff wars, China um, went to Brazil and bought all their soybeans instead. And of course, once those trade relationships develop, then they don't tend to disappear overnight. So it's far, far cheaper for China to get them with the tariff stuff going on. It's far, far cheaper for China to get them from Brazil than it is from the US. So soybean farmers in the US have been hit hard. It could be the same game in reverse. So if US create some frameworks without anything more solid on that, but have had talks about that, that could be used as a tool. I don't think the Chinese are that stupid. I think they're a lot cleverer than that. But Trump may go and try and say to China, well, look, we've got these relationships establishing in Alaska, in Ukraine, in Australia. If you don't play ball, well, then we'll try and import more from those. The problem is that the Chinese know that the US need to import 70% plus of what they actually need. So that it's going to be some time off before they can do anything about that. China might farm the market. I'm not sure what you mean by that. Sorry, Roger. I mean, China are always going to dominate the market for the near future. That'd be interesting. If we look at, we'd expect our Luca to be looking pretty shaky as well. Actually neutral today. That's interesting. But you can see the choppiness over the last sort of 3 weeks just on the back. And again, we saw a Luca bounce from lows that we hit in mid-June, up around about 137%. We can see again a very similar chart story. The difference between this and previous charts is that this looks as though it's already bouncing. A level to watch here perhaps is that $8 level. I've talked about that before. Currently range bound, but a nice bounce off this, possibly around about 40 cents, even a move up to there. But you can see the length of these candles. The volatility has gone up significantly over really sort of back end of September, early October. As the trade wars continue. Oh yeah. Controlling the price that suits them. Yeah, absolutely. So obviously, if you control the supply, you control price. However, I suspect that they're going to use it as a strong negotiating tool to get stuff out of the US. Semiconductors are the obvious potential target, or to get tariffs low. I mean, see, the tariffs is a funny one because the assumption is, of course, or the public assumption is that if somebody puts tariffs on goods, so if there's a 30% on Australian goods, 30% import into the US of Australian goods, then Australia paying 30%. Well, that's not true at all. The people who are paying for that is the US consumer, because the tariff is paid by the importer. What it does mean is that US importers then look for other markets where tariffs may be lower, or or if they have to wear it, then they have to potentially put the price onto the consumers or reduce their profit margins. So it's the importer that pays the tariff, not the exporter. but it's just a competitive and negotiating tool. Is what Trump is using them for now. I think completely flawed in terms of a process. It's very different. I mean, again, a lot of people mix up the difference between a trade imbalance and tariffs, or sort of import-export duty. A trade imbalance, if a country like China has the major rare earth supply, then that trade imbalance in that particular sector is simply because China have got it and the US want it. So the US is going to be in a negative trade situation with a lot of countries simply because they want to bring in stuff that they don't make there, and they don't make it there because it's cheaper to buy it from elsewhere than make it in the US. So tariffs are an import tax rather than an export tax, but it's a competitive and it's a negotiating trade deal stuff. And of course, if everybody slams tariffs on everybody, nobody wins. Right. Okay. Back to the plot. Okay. So Aluka and LYC currently, I mean, LYC is the purer and stronger rare earth play. So if you're interested in the long term, LYC is worth a nudge. Iluka probably is less pure in terms of a play, but because the refinery is under construction, obviously do your due diligence on any of this. Go and do your research. Obviously, as you get down, more speculative stocks. ASM are generally well thought of, but Linus and Iluka are the two big players. Technically, at the moment, Iluka looked like the better setup, but both are worth keeping an eye on. In the US, it's sort of interesting. There is not many rare earth companies of note. So really, the only big player is MP Materials. And I don't think any of these. Let me just check. MP Materials. Yes, MP Materials do. I think they might be the only one that trade on the US. Let me just do a daily thing. MP. Oof, belted. Again, a similar sort of story. Looks really under pressure, and this may be it's breaching support. This looks like a short. So again, a magnificent run, really, since the end of May, to the tune of 400%. That's ridiculous. But we're now back in this range here. Now, it's worthwhile being patient for this. It looks at this stage, although it may come down and test this sort of late 60s, maybe 66, 67. The critical thing there is, does it bounce as it did here back in early October? And let me just see when these guys are due to report. Because obviously, as I said, any US MP Minerals, isn't it? Materials. Okay, November the 6th. Not for a while. You've got about, yeah, so you've got about best part of 3 weeks, so towards the back end of the earnings season. So there you go. Yeah, so look, in terms of a long-term play, this looks interesting. It looks choppy, potentially, and obviously, um, the concern is that maybe the major move of the year has gone, and we're now going to start to see it, see prices settle within some sort of range. Um, but what is interesting is the ranges are wide, and these stocks are really responsive um, to the latest in policy news. So it could be worth a look at. Um, Let me just check USAR, see if they're on. I don't think they are. I was a bit pushed for time just before I did the presentation, but oh, no, USAR isn't. Obviously, if you've got, as I said, if you've got accounts elsewhere, IDR. Neither of these two are big players. Um, it, mm, that ETF though looks really interesting. I would be actually just to give you it again, it's REMX. Okay, as I said, it is tradable on this, and it seems to have an exposure to international rare earths. It does have a little bit of. It's not pure rare earths play, but it's a rare earths plus minerals play. So those would be the three or four I'll be having a look at that are tradable on MT5, Linus, LYC. I look at both on the ASX, um, and then the ETF REMX, and also MP.NYSE. Be aware that these are quite volatile, and so if you are doing that, you need to consider not only current but standard volatility, and make decisions on whether this is the best time to have some exposure. If you are, maybe an accumulation stroke reduction strategy is possibly not a bad thing to do if you are interested. Oops. So if you are looking at rare earths, just make sure that they are a fit, not only from your portfolio side of things, but also a fit for your trading style and your trading objectives, of course. Just research the suggested stocks, keep abreast of US, China, and US, Australia trade news. And of course, things like earnings are good to check in on. Yeah, I can show you the panels. Right, okay, the latest on the panels. Let me just give you the update. Okay, so there's the trade panel. This has been redone. So now swap's done. And it tells you on the share CFD what the swap rates are. Trade execution on this, and now works for stocks as well as FX, as well as indices. So if you want to hold, you would tend to take a note of medium-term holds on things like the indices on VIX, and of course share CFDs, and then you would calculate risk and then of course execute your trade. So that's the update on that. For those of you part of that scene. The FX scanner, just rechecking those, but this is looking good. Let's see if anything's shifting now. Look at the US Canadian dollar. See how quick it is to find a potential opportunity there. You can see there, at a potential resistance level or potential important level here, you can see consolidation here and here. I wouldn't be trading this unless we start to tackle 140.21, and you're looking for maybe 15 inch. It's not the best time of day right now, obviously. Aussie US, sorry, Aussie Kiwi, and are in a little bit of a range at this stage. So a failed fractal breakout, really. There's the fractal there. Tried to break it out and didn't. So it's stuck in this range now. And then, of course, then our major. Our rate controller. The trading control is the dashboard control, sorry. So, yeah, FTSE's outperforming still. Sort of interesting. Yeah, all the major data points, you can see it on the economic calendar here. And we do have some, we've got the ECB chair speaking later. There's the EIA control stocks. That's going to be important. Cool. Anyway, all done. Just be aware this week, I've just got a vibe about this week. As long as earnings keep on coming strong, we're going to be in an okay place. But the problem is there are major headwinds right now, so just be careful. Yeah, I can have a look at Tesla before we go. It's Tesla chart. So you can see Tesla is range bound, top of the range. Check out on earnings and the other one, of course. Yeah, the other one. I can have a look at Nvidia for you up in pre-market. We're just waiting to see with Nvidia. I think again, earnings not that far away. I'd be looking for a move over 200 now at this stage. Although that range isn't bad. AMD is a much better chart that we showed before if you're wanting exposure here. In that, but if you're wanting AI exposure, you're not going to get better than Nvidia. But there's quite a few people now starting to witter on about maybe the AI bubble is sort of, or maybe the AI enthusiasm is sort of coming to a pause point. We still haven't had a market pullback in the last 3 months, so it wouldn't surprise me to see a little bit of market pullback. Anyway, that should do for now. I've been sort of sharing stuff with you for a little time now. So thank you very much for all your questions, all your comments. Whether you watched on GoToWebinar or whether you watched on YouTube, it's been a pleasure and a privilege serving you. We'll hope to see you again very soon. If you want any questions, any of that sort of stuff, Mike.Smith GoMarkets.com. So the spread right, I'll put it in 2 chats. There we go. And I will see you. Now, just a heads up for those of you who attend the live updates. There isn't one tomorrow. It'll be Friday instead. So just be aware of that. It'll be Friday morning. Thank you very much for clicking the likes and stuff on YouTube. So appreciate it. It will be, yeah, so it'll be Friday morning, Friday lunchtime if you're on the East Coast, Friday morning my time. So take care, enjoy the rest of your Wednesday evening. Thank you, Paul. Cheers, Johnny. Thanks, Susan. Catch you later, Wayne and David, and all of you guys. Take care of yourselves. Thank you very much. See you soon. Bye-bye for now.